Welcome back to the EQ Livestream. We're here today with our SDG show, our monthly show where we focus on the Sustainable Development Goals and looking at how emotional intelligence can help support change makers and entrepreneurs and people who are trying to create difference in the world. We know that there are a lot of technical skills like financial acumen and IT that are important for these kinds of changes. But at the same time, there's another dimension, which is about what happens on the inside. And at 6 seconds, we believe that all change starts on the inside. And that's really the topic of our show today. But we're looking at something new for us, which is money. And how could we change something like money and investment and capital and the way businesses acquire funding? What does that have to do with emotions and emotional intelligence? And we have some guests today who are creating something very different in the world of venture capital. And we're going to be exploring with them how they came up with this idea and how does emotional intelligence fit in this world of venture capital, which is notorious for not being very emotionally intelligent. So I'm pleased to invite our guests to join on the stream here. And we're going to start by asking them each to introduce themselves. We have another guest who hopefully will be joining us soon. But Jacques-Philippe and Kane, thank you for joining. Would you please tell us one reason why you felt compelled to do this crazy thing that you're doing? Jacques-Philippe, let's start with you. I didn't mean crazy, by the way. This
of course you did, and that's okay. if it's not crazy, we probably wouldn't have done it. So it was actually right on. For us, it's
like the word bold, but bold and crazy, they go together.
Bold. There we go. That's it. Bold.
There we go. For me, it was a few things. One is working with people that I'm excited to work with, that I've known for some time, that I think are aligned with respect to values. Two, to be able to do something where much of what I'm passionate about can be done within one place. And I find that to be the case with Ozone X. Three, to be able to shape the future we want to see in the world by supporting change makers and founders and people who are solving for problems that we consider to be consequential in the world. For us, we call it our SHEE acronym, SHEE, sustainability, health and wellness, education, and future of employment. And so having that as the backdrop as to the why, whether it's myself, Kane, or Leah, we're also, not only inclined towards investment, but also building. And when we build, we really want to shake things up and make them be as effective and efficient as possible. And so we decide to incorporate tech and collective expert intelligence, leveraging AI in order to do that more effectively. And in our view, kind of emotional intelligence and the collective good does not actually conflict with our financial returns and the value that we want to drive for our limited partners. It actually complements it, and it makes it more sound on a risk-adjusted basis. And as we proceed, we think that that's what we're seeing. And I'll pass the mic over to my compadre, Kane.
Kane, what's something that motivated you to dive into this bold space? Oh, and we're having a little technical difficulty with Wi-Fi.
Well, in the meantime, I'm happy to continue.
Well, while we're waiting, there we go.
There we go. We're back. You guys hear me again? Yeah, no, I think a lot of this also is that, interiors drive exteriors, right? Is the reality of how this world works. And unfortunately, cognitive bias is an interior way of looking at the world. And so cognitive bias is what drives people's decision on what type of investments do they make, what kind of companies they're looking for. And so it's one thing to simply, say we want to remove it. But I think it's a much more enlightened method to say, look, it exists universally, rather than remove it, sort of immerse yourself into it and accept it. and then allow for multiple different biases to work within each other, right? To almost, in some ways, average each other out in a way which allows for a much more collectively, therefore, elevated position of how to make investments. And so we see sort of ourselves not pushing out the interior of life background, life skills, networks, things you've seen, but enabling us to combine those in a way which makes the overall, woven fabric that much more high count, as it were.
All right, let's double click for a minute on this piece about bias.
And perspectives, treat them as opportunities to see different lenses, and then from there, integrate them more deeply as you make decisions that are therefore concerted across multiple viewpoints.
Okay, let's explore this topic of bias for a second. Jacques-Philippe, in one of our previous live streams, you shared some data about venture capital and equity, and the idea that we're having technical difficulties here. That I think you said 6% of, is it venture capital or is it business capital is going to women and people of color, entrepreneurs who are women and people of color?
Yeah, I mean, that's basically right on. If you consider our target demographic are women, people of color, groups that have been largely marginalized from the capital flows. And those groups, that demographic represents well over 60% of the population. But as you mentioned, it gets less than 6% of the capital. And the other thing that I think is important to add, which, these stats were the same or worse 10 years ago, but typically people assumed or at least suggested that somehow it was because that 60% plus of the population was just not as good. They weren't as talented. They didn't have the expertise. But now there's actual data. And so whether you look at McKinsey or Kaufman or BCG, it shows that the demographic that I mentioned actually performs the same or better than their peers. They just don't get the access to the capital. And so the system, as it has been done, for the last forever, is just not serving most of the population. And in so doing, it's not serving the LPs because many of the potential highest performers are just not getting the capital to grow. And for the layman, because as you mentioned, your traditional audience member is not in this space, but your average viewer probably went to school, and most of the schools were co-ed, and so boys and girls were together. And if their schools were anything like mine, more often than not, the girls actually performed better than we did. And so to assume that wouldn't continue to be the case in the professional arena is just really lacking something. And so from our perspective, there's a huge opportunity to be had, and we're very excited about the work that we're doing.
So does either of you happen to have an answer in the chat? Sue just asked if this is also happening globally. Sue is the director of 6 Seconds in Asia Pacific. And I see we have people from Korea and South Africa and St. Louis, Missouri, and New York and California. So as we think about this more global perspective, do you have any insight into how equity is working internationally?
I really like the broad dispersion we're seeing. Let me see if Kane would have participated. If not, I always have views, but I don't want to hog the mic if he's actually able to participate.
Kane, what do you think about global investments and equity?
Yeah, happy to jump in. And again, sort of turning off my camera so I can hear the conversation just due to bandwidth issues here. But I think, one of the realities is that this is a global pandemic, right, to use the word of this year. And that, if anything, the pandemic has even worsened it, right? We were sort of trending positively towards more not only women investors, but also women founders. And we've seen those numbers actually now go down as people optimize towards what's sort of familiar, right? Which has obviously been the past and the networks that they're used to sort of going after. And so, one, we're looking at sort of how do we buck against a trend? Two, how do we allow for ourselves to really see it as not just a Western or a sort of European particular problem set, but one that's global. And it all obviously has their iterations thereof in terms of different, ethnic or cultural backgrounds they're bringing. I'm Brazilian. And so, looking at, for instance, a Latinx perspective, right, where in many cases the fact that matriarchs may have run the family, but the patriarch went out and won the bread, right? And that mentality is one that's sort of being broken down and obviously enabling that to be seen as sort of further exacerbated with data, right? Just letting data really speak for itself, not being one where it's about, trying to speak of equality on more of a cultural level, but more on a let data speak for itself level and show you the results that we've seen from already small data sets for growing ones that show that obviously, one, more broadly speaking, there tend to be faster returns, better returns, and ones that are typically done with less capital. And that seems to be a universal trend that we're seeing, albeit our particular focus on the market right now on where we as Ozone X are targeting doesn't really seem to be a sort of regional problem that is limited to just a US or Europe or Western audience.
I think we need to just understand that this better and faster returns with smaller investments. What?
I can chime in a little bit. So I think it may be BCG where they did a study and they looked at what were the returns for every dollar provided to men founders versus female founders. And I think for men, it was 38 cents was returned. And for women, it was close to 70 cents. So it's pretty significant in terms of the return on money split along gender lines. And then to Kane's point, also quicker. So oftentimes, for funds, you're looking to have as large a return as possible in as short a time as possible. And so women tend to have those returns quicker than their male counterparts.
Wow. Okay, so.
And if I can just add to that, I think a key part to keep in realization is that what makes faster returns are often more sustainable businesses, right? When you're, let's say, a little more conservative while aggressive, you're more focused on profitability than pure growth, right? And that mentality of kind of seeing how you're creating a company that's sustainable and sort of incremental is one that I think we've seen as perhaps a way to approach markets that their sort of male counterparts are a little more aggressive and a little less managing the whole house sometimes, to put it that way. And the balance of perspectives is one that creates a business which investors see as scalable, but also sustainable at its current size or its current place of growth. And I think especially in these COVID markets and pandemic world, there's been a lot more increasing focus and attention on sustainable, profitable, self-sustaining businesses than those that are simply rapid growth, but are going to cost hundreds of millions, if not billions, to really defend and get market share. And so I think part of it also matches into how the types of businesses, the ways that businesses are cared for, and then the way that they are seen for scale in ways that are perhaps more comprehensive in some ways than we've seen in the past.
So my sense is that once upon a time, businesses had a long-term horizon, and that value in business was measured by return on investment over decades. And now that seems sort of irrelevant at least in the stock market, right? And we look at something like Airbnb having more valuation than Marriott.
Sure.
So, this current context seems to be one of pure hype.
So it's definitely a lot of hype. And when it comes to valuation, what investors are valuing is not only the existing assets, but more often than not, the bulk of the valuation is based on future potential, right? So for example, right now, Apple is the most highly valued company on the planet. But a large part of that valuation is based on the fact that people believe they're going to keep growing. If tomorrow people believed it would no longer grow at all, the valuation would drop to less than most companies that you're familiar with. And so that's why a company like an Airbnb or some of these companies that have nowhere near as many assets as their peers that have been around forever end up having larger valuations. And sometimes it's valid, right? Amazon has had a larger valuation than most of the retailers for a very long time. And at first it looks silly, but now they also have more revenues and more profits too at higher margins.
So this is relevant to our conversation because of this question about hype, this question about how that decision is made. Keynes used the phrase the animal spirits of the economy. In other words, emotions, right? And that this whole idea of like, oh, well, they're going to be worth more in the future, that is partly rational, but mostly not. Mostly it's somebody has sold this idea and hyped this idea. And as I understand it, you're trying to bypass some of that, like what you described as ego-driven, and I'm using the word hype, like flash in the pan, everybody pay attention to me, I'm worth more. As I understand it, you're trying to figure out a way to around that nonsense.
Sure. And, again, personally, I wouldn't necessarily say that valuing future potential is bad, and kind of taking it back to, the basics for everyone. We can think of it in terms of human value, right? So I've lived longer than my children, and I think I can still do a lot more than them. But when you speak with most other adults, they would suggest that my children have greater potential than me and may have more value and, might be saved if you had to pick one. And so to a certain extent, the same thing can be applied in business. Our issue is more so equal value. It's not underestimating the value of varying parts of society, right? So it's the fact that a female founder and a male founder, generally speaking, all things considered, should have equal opportunity to build their businesses, and the considerations should be based on the merit of their business, or irrespective of race or creed. A lot of the things that we've been speaking about across sectors forever should apply to business as well.
Yeah.
And now it's actually clear that that kind of multiplicity of view and experience leads to better financial outcomes. And it's commonsensical. So for us at Ozone X, we actually think of it as an arbitrage opportunity. So the fact that we're targeting underrepresented founders, to a certain extent, it looks good. It's the right thing to do, etc. But the reality is, it's just the smart thing to do. There's so many people who are not being serviced, and they have amazing ideas, amazing talent. There's less competition looking for deals. We think we're going to significantly outperform our peer VC firms because they're all overlooking that entire demographic. And so for us, literally from a pure business perspective, it's just very smart as well.
All right, I want to come back to that in a minute and talk about the data that you've found so far and why this model actually is better financially. First, I want to just go back to the piece that Kane raised about bias.
Sure.
And about the culture of VC. And Kane, maybe you can come back on this one. You've both been around investing in VC for quite a while. And I imagine there's something in this experience. You've both been successful, and Leah as well. So you're successful in this system. There's some reason you see new opportunity, but there's some other reasons, I suspect, that you're saying we want to exit that way of doing business. And I'm wondering how you've experienced the what some people describe as toxicity, at least bias of the system that you've been in for a while.
Sure.
Yeah, happy to take that first flash, and then Jacques-Philippe, please follow up. I mean, I think from our perspective, we sort of fit on the fringe in the sense of we may not have the typical, let's say, origins to our backgrounds, but we then have backgrounds that fit into what's acceptable, right? Having gone to Ivy League schools, having gone to business schools, having basically gotten ourselves into the right network. But it doesn't change the fact that, you know, obviously still coming from perspectives of having different heritages, having not the same network access, and sort of having to, you know, find our way in, build our way in, that there's additional just work, additional requirements to simply get your idea and the validity of your idea heard and understood. And a lot of what I think we benefited from was the fact that we did manage to go through certain, you know, door opening pathways, but that sort of exact process of having to do that to gain validity was what many others wouldn't necessarily have to do in order to be seen and sort of considered on their ideas. And the sort of premise is, how do we, you know, remove the friction from basically validity of idea and ability, right, to therefore ability to enter the, in this case, financial markets, private financial markets, build, you know, solid companies with clear bold missions in a way that is, again, based on the meritocratic sort of value of the idea and the ability of the founder, not based on some ethnic lineage or, you know, some connection network access that you're bringing with you. And I think trying to kind of create that differentiation is what motivates us. I mean, myself being Brazilian, my mom is one of 10 kids. I'm pretty much the only one who's gotten access to the education I've gotten personally. And that's what's given me all this access, depending upon the outside of the sort of reality being that I think many of my cousins are just as capable, if not more so, but just don't have the right, you know, overall milestones or sort of, you know, hooks that they can necessarily take to a VC to therefore say, this is why you should trust me. And I think that's a lot where we want to create something that's beyond just beliefs, even our own internal beliefs, right? We're still coming with our own biases, but really sort of think about how do we have the benefit of a platform of, you know, bringing together multiple viewpoints in a scalable way to allow for merit to be what's guiding the decision process, rather than sort of personal biases or personal networks or anything else that's sort of typically been the system state, which gain you leverage into then raising capital, building businesses, etc. Jacques-Philippe?
I think Kane hit on all the key points there. Thank you.
And I want to just welcome Leah, and we're having all kinds of technical issues today. If you're able to get your camera on, that would be awesome. And I wanted to also just pause and say, those of you who are here in the live stream, if what you're hearing, I'm just like keep coming up with more and more questions that I'm very curious about, and I'm wondering what you're curious about, folks. What you're hearing in this intersection of, and we haven't used the word systemic racism yet, or phrase, and maybe, you know, that's come up in this show many times, that we live in a world that is structured on ideologies and institutions that come from a racist or patriarchal or colonial past. And those systems and structures reinforce themselves. I remember Princess Eyre Stewart said, power does not concede itself. Like, we're not going to get out of that system without actively bringing in something different. And so in this intersection, we're talking about this system that if you have a brain, you have bias. We're all biased. And those biases are shaped by our social systems and the way we spend our money, the way we invest our money, and who we give our money to, and who they give our money to, ultimately either changes those power dynamics or reinforces them. And so I'm thinking about this just from a personal perspective. I'm not like a venture capitalist. I'm, you know, I have a couple dimes I can rub together, but like, how do I use what money I have in a way that aligns with my values, and try to, at a personal level, do what Jacques-Philippe and Kane have been talking about, of trying to look beyond the convention. Okay, so now, Leah, if you can speak, we'd love to have you introduce yourself and tell us what got you into this fascinating project.
Yeah, no, absolutely. Very, very happy to be here. I mean, in short, I've been an investor operator, both sides of the pond, sort of both sides of the table, and both as a venture capitalist and co-founded a few companies and raised capital. And really, as a woman on both sides of the table, I'm very well aware of the biases that exist and the opportunity they represent. And to your point just now, I think being an investor comes with a huge amount of responsibility, right? Because you are choosing with your dollars what kind of future you want to see. And not all the companies you invest in are necessarily going to become household names of tomorrow, but at least they have a chance. And I think that responsibility sometimes gets forgotten. And you can see a lot of momentum investing and things like that, and maybe things that are not potentially ideal for the future of our planet or for future generations. And I think we need to take that back, both in terms of socioeconomic impact, demographic impact, opportunities impact, and really, the way we approach it, we really are stepping in both in terms of creating a world where you can create the company you dream of, no matter your background, your network, but also within that, kind of something that falls within ESG more broadly, or sort of sustainability, health, education, and employment more specifically, things that really move the needle on the well-being of humanity.
Okay, you just said like 50 things that we have to talk about. So first of all, just like a super simple ESG for those who are not familiar with it.
Yeah, it's kind of like think of it in terms of doing good for the world, sustainable development goals, or ethical investing, things like that. Things that maybe the latest photo sharing app wouldn't fall within that, but let's say a scooter share company would, because it reduces pollution in the cities and helps us move around more easily. So like think of any given investment. If it becomes successful, what is really the impact it's going to have on us and our planet?
And there's a growing body of data that I've been seeing that ESG companies are outperforming conventional companies. And particularly this year, it's been dramatic.
Yeah, absolutely. And our belief is it's not going to be even something exceptional going forward. It's going to be a necessity. If you want to be in business, you need to care. So it's going to become from maybe currently an order winner to basically an order qualifier. It's becoming table stakes, as it should be.
And maybe to add an example to highlight what Leah is describing. Once upon a time, we were all about shareholder value, and that was the only thing that matters with respect to investing. That day is gone, right? So 40, 50 years ago, you could have an oil and gas company sourcing oil in the Niger Delta, polluting the environment, being really harmful to the community, and then selling clean gas in Los Angeles. And it would be fine because news didn't travel as freely, and it worked out. So as a business matter, it wasn't a major risk. Whereas today, if that happens, everyone finds out and their share price takes a massive hit really fast. So literally, companies now have to take environment, sustainability, community, employees, many more stakeholders into account as a matter of business. I think many of them don't realize how core it is to their business yet, but the intelligent leaders are tying that in. And that's part of the reason you're seeing such a difference between ESG-focused investors versus the rest of the pack. And to Leah's point, you're going to see more of that going forward.
And transparency is one of the drivers of that. This is a place of important intersection in our work as the Emotional Intelligence Network, because many of us who are working in business are trying to say, actually, the human dimension of your business, whether that's employees or customers, that actually people matter. And therefore, we need to be better with people. We need to understand what really drives people. And there's some businesses who still are not on board with that, but I think there's a growing awareness. What we say is emotions drive people, people drive performance. But one of the other things you said, Leah, was choosing with your dollars the future you want to shape, I think. I can't read my handwriting.
Yeah, something along the lines. I mean, it's a little bit inspired by Alan Keyes sort of, if you want to predict the future, invent it. But likewise, you kind of can be a little bit of play of word and say invest in it, because you're giving those companies the opportunity to make their dreams come true, to build the companies they want to build. It's going to have the impact they want them to have. So by allocating your dollars, you're choosing what future you want to see.
Now, you guys don't use the term your impact investing. You have a different model than the impact investing model. Is that right?
Yes, absolutely. I mean, it is impact in a sense, but impact has been so misused and has so many different meanings to different people that we find that it can be very confusing. We invest in for-profit companies, but they have to have a positive impact on the world. And again, as we said before, we don't see it even as a choice anymore. It's a necessity.
Hey, Kane, did you want to jump in?
Well, I have a question for you, Kane, which is following up with something Leah said. You were talking before about bias, and I think that I heard Leah say that there's actually opportunity in that bias. And I think you were alluding to that. So, Kane, maybe you can, we think of bias as something negative and problematic. Does it also create opportunity?
Yeah, very much so. I think, it's, again, not a matter of trying to, as I said before, discredit bias and look at bias as negative. It's more embracing it as you come with certain perspectives and how those bring additional almost, spectrums to the overall light sort of range that then can give you a much more broad picture, a much more sort of multicolored picture. And I think that's the benefit of enabling multiple different biases, as it were, to come. And really, I would use the word that they're biases for perspectives, right? One has a negative connotation, one has a positive, I think. And really looking at it as multi-perspectives in a way that are interwoven together to provide sort of a more, let's call it, variable light sort of spectrum image allows for you to see things in different depth than you would otherwise. And I think that's a lot of where we feel both as partners and then also as, a larger platform, that we can sort of allow for those different, spectrums of light to converge and create a much more detailed picture.
So we talk in our work when we're teaching people about how to use emotional intelligence, this concept of perspective taking often comes up. In fact, sometimes we think about emotions as perspectives, that our emotions are, anger is telling us about this, fear is telling us about this, sorrow is telling us about this, jealousy is telling us about this. They're all perspectives about what's going on with us. So I'm fascinated by this idea that bias is actually perspective. Okay, so let's go to Ozone X now. Unless anyone wants to add anything else about the problem that you're solving. Let's talk about the solution. How does this work?
Sure. I mean, I can start there. So with Ozone, as I mentioned, we're targeting specifically underrepresented founders because we think it's the right thing to do, but it's also just smart. But then separately, we took a step back. Go ahead.
Why is it smart?
Well, it's smart because it's kind of basic economics. There's less demand. There's less competition in that sector. So let's say there are 1,000 venture funds in the United States. There's actually more than that. Well, right now, probably 92% of them have only, I mean, I don't know what they'll do in the future, but they've only backed white men, right? So there's a decent chance they'll keep doing that. Whereas the United States is 50% women and, 12, 13% Black, 18% Latino. So all those other people who have ideas and businesses and things that they're building, they're not getting access to that capital. And so for us, it's smart because we're able to get the best of the best among an already amazing group of entrepreneurs. Mm-hmm. And so we think not only is our model differentiated, and we can get to that now, literally just our target demographic provides us a better opportunity to do well because they have fewer options in terms of where to get the capital.
So in a way, investors are competing for good entrepreneurs.
Absolutely. So if you're in a place like Silicon Valley, even if you're not in the sector yourself, you've probably heard the valuations are always astronomical. There's a company recently, I won't mention them, but seed round was $100 million valuation. And all they had was a couple founders and really an idea. And so that happens quite often in Silicon Valley because there's a lot of investors. There's a few founders that they all want to back, and they have to compete with respect to terms in order to get in. Whereas across the rest of the country, that same company might have been valued at somewhere between, 1 to 4 million. It's a massive difference.
And then as an investor, that means your investment actually has more value when the company succeeds.
Exactly.
Interesting. I never really thought about that investors are in a way competing for entrepreneurs. I know entrepreneurs think a lot about that they're competing for investment.
Sure. It cuts both ways. And that's one of the benefits. And that's part of the reason we just think it's so it's the right thing. It makes sense. And all of us understand the problem, right? Having come from that world, both as investors and entrepreneurs, and even helping to support it from a philanthropic perspective. But if you really just boil it down to the business that we're involved in, we think the dynamics make it such that we're well positioned to do well for our LPs, because we also have investors, which we have to be thoughtful about. An LP is a limited partner, and those are the people who invest in our fund. And in the earlier conversation, with Leah, when you were talking about the impact investment and the fact that we don't necessarily call ourselves an impact investment fund, that's partially because the term is often perceived as being somehow less focused on financial return, as in they're focused on social benefit and all these other things at the expense of financial return. Whereas for us, we think of it as an and. They complement each other and actually allow us to perform better. And so we choose not to use terms that sometimes people don't understand vis-a-vis what we're doing.
Okay. So we're talking about changing where money goes, and you are also changing how those decisions are made. And Kane alluded to this. Kane or Leah, does one of you want to share a little bit more about why does it matter that we change how these decisions are made? I think we've gotten clear on why we need to change where money goes, but who cares how the decisions are made? All right. Well, Jacques Philippe, I know you care how the decisions are made.
I think the how matters as well, because it can help you come to different outcomes, right? And a multitude of different ways of looking at it can help you come to better conclusions, right? We all know the diversity of thought tends to be super beneficial. You can see it in diverse boards tend to outperform and so on. So being very deliberate about how you approach that, and having that diversity of thought embedded in your decision-making process can absolutely deliver better outcomes, and also deliver outcomes that are closer to our mission.
I think you just said we all know that. Unfortunately, I don't think we all do. But so diversity of thought leading to better outcomes. I mean, doesn't VC, there are a lot of different VCs. Isn't there a diversity of thought already?
Yeah, of course there is, and every human kind of looks at the world through the lens of their own experiences. But what has happened to date is that there's been a lot of VCs have a similar type of background and a similar type of schools that come from a similar type of experiences, which then narrows down the diversity of thought. So what we are being very deliberate on is really making sure the three of us, have come, from different parts of the world, different sense of backgrounds, different experiences. But how do we further improve our own diversity of thought beyond just the three of us? So what we are embedding in our process is really being thoughtful about that to make sure that we get as holistic a picture of any given opportunity as we possibly can, and also sort of make up for our own conscious and unconscious biases.
Yeah,
So,
I mean, and maybe just to build on that as well for some of your viewers, I sometimes call what we do post-ego investing. And so I think highly of myself. I think highly of my co-founders. I think we're amazing, just as much as any other VC fund, and hopefully just people in general. With that being said, when we're assessing a company, we want to be as thorough as possible, right? And part of what gets in the way of being super thorough is ego, assuming that you know more than you actually do know. And so it's true, I built a solar power product company that grew very fast, and I could get away with saying I'm an expert in solar. But the reality is things change quickly. It was many years ago. And there are definitely many people who know more about any particular segment of solar than I do. So our process allows us to take advantage of that for all the deals that we look at. And so what ends up happening is between the diligence that Leah, Kane, and I do, and our venture partners and our broad community, and the fact that we have it backed by tech and supported in a scorecard and a score of 1 to 100, we really combine the heart and the mind in a way that lends itself to much better, sustainable, scalable, financially rewarding outcomes. And so for us, that's really exciting.
All right, I want to talk about that heart and mind piece, of course, because that's what we're all about here, is getting head, heart, and hands working together. But let's maybe just get a little bit more background on the Ozone X process and this idea of a more collective or community-based decision-making process. Kane, you want to come back and share a little bit about the process that you're using? The process does not involve good bandwidth today. So, Leah or Jacques-Philippe? Well, there's Kane.
Sorry, my video and everything is acting slowly. To you hear me again? Yeah. So, I mean, the process for us is about creating, in this case, tech solution that brings together, as we mentioned, not biases, but perspectives into one quantitative and qualitative scorecard. It's kind of the way we describe it. Is that typical process that VC works right now is one partner becomes aware of a deal. They kind of work as a champion, typically have a couple analysts, and then they try and understand, is that worth pursuing, make a decision, typically with a small group quickly, and then ultimately leads to that becoming part of their portfolio. And what we try and do is add an additional layer of kind of group perspective, where we almost have a focus group of typically 30 to 50 different sector experts who we choose for a variety of reasons to evaluate that deal in a way where they get both a quantitative score they can give, the business team, the business model, the timing, aspects that are consistent across businesses, as well as then qualitative score of things that they think, make the model weaker or stronger, what they think the type of team needs to be for this particular type of business model. So all those things compound in a way that give us then a sort of way to look at a company in a much more objective way through subjective lenses. And I think that's sort of the premise of where the platform then informs us. Still, there's obviously a lot of, art within the science. We try and bring more science to the art of evaluating companies. And it also, benefits the community base. They get to see new interesting deals, our experts. They also get to co-invest alongside of us should we agree that it sort of met the minimum sort of score and is worthy of pursuing. And obviously that benefits the companies because they often have people who are now self-motivated for clear incentive reasons to have that company be successful, bringing sort of now a network of people who can help increase the likelihood of chance of success from that company. So that's sort of, again, a bit around how the process then translates into almost a increased network, increased access, as well as a diligence process, which allows us to be much more objectives in the way that we evaluate these companies by bringing in these multiple perspectives.
I mean, it just sounds like something every investor should be doing, like get expert opinion on the company. Like, why doesn't that happen everywhere?
No comment on that one. I'm conflicted. I kind of agree, but at least in the near term, I don't mind that everyone else is not doing it yet. We think, so part of our view is that we're actually creating the venture firm of the future. And so in the next 5 to 10 years, you're going to see more firms doing what we're doing. They're just not doing it yet. And so we're happy to get the forefront of that change because it is necessary. So I'm being facetious. We do want others to do that, but we're happy that we're doing it first. And we want to help create that standard for others to follow, because as the numbers play out and we perform in the way that we intend to, the LPs and investor base are going to demand that type of thoroughness and also diversity of views with respect to the types of founders that investors are backing.
And in fairness, I mean, of course, every investor does have the experts they call, but doing it in a way with the larger number, so it becomes statistically significant and way beyond. Really, it also requires a technology component in a way that it scales in a timely manner. Because also you want to get back to the entrepreneurs relatively fast and so on, so everybody knows what's up and where you stand as an investor. So there's also an aspect that the technology wasn't really ready, wasn't really there, but we are getting to a place today where it is possible.
So you're blending this technology platform with this community platform to create a perspective on potential investments that it should be better than somebody, a couple people sitting around a table. What's the evidence you have that it's actually working?
Leah has this one.
All right, I can take this one. So the actual method of doing this has been put to test through a portfolio of 25 investments and small kind of 100K checks in each, and just to follow and see where does this process end up. And out of these companies, 86% ended up having a second round and up round within 18 months, which is a astoundingly high number because normally the numbers are between 20-25%. So call it 4x the usual. Of course, it's still early days. We haven't had enough time to follow these companies through to exit to really be able to have final numbers. But so far the data is extremely encouraging.
And
what is actually, and I should add to that, what is for our thesis, what was even more exciting, that 44% of these companies were women-led, and then compare that with less than 3% of VC dollars that go to women-led teams.
So your human and expert system helped you pick these companies in this test round. I like it that you said that the 100K was small, because I think for a lot of us that sounds like a lot. But so putting in around 100K into a bunch of companies picked through this system, you found less bias in
Method, yeah.
terms of much more equity in terms of gender and presumably also race, since that's a focus of yours. And then you had 4 times the success rate so far of conventional VC.
Yeah, and I think part of what Leah was trying to highlight as well is this test, which you think of it as a beta. It was literally just looking for the best deals possible, right? The best deals possible. There was no filter looking for women or underrepresented, like no race or anything else. It was just looking for the best deals. And what it was testing for is how efficacious is the collective relative to the traditional approach. And what we found is that it performed way better. But then even though there was no filter looking for women or other types of underrepresented founders, about half of the pool of founders represent that demographic. So it looked a lot more like society in general, even though we were looking for best performers. And so now we're applying that specifically to our target, which are women and other underrepresented groups, but we have the benefit of that study.
Wow. So that initial study gives you evidence of the methodology, but also shows you that within that methodology, this target group, there's a tremendous value to be created or co-created.
Correct.
All right. Well, we're coming towards the end of our hour here, so I want to make sure that we have a moment for each of you to share what's inspiring you and energizing you and challenging you yourself as an entrepreneur as you're moving forward. What are you looking forward to in getting out of 2020 and moving into 2021? What's next for you? So, anyone want to start with that? Kane, you want to jump in with what's going on for you next?
Yeah, happy to dive in. I think, ultimately, as we look at the trends, I think there's an ability for really, in this case, even more so in pandemic-based businesses, where ultimately there's an opportunity for us to really think of this as proofing companies to be ones that are really long-term sustainable, and putting us in a place where ultimately, sorry, little one here is running around, but putting us in a place where ultimately the leverage is that companies are really based a lot more on their merit, not necessarily on their growth. And I think that's part of where the opportunity to balance out simply one-sided metrics, whether that's from a place that you're coming from background, or that's a opportunity to really look at a company here, which is in this case enabling people to see something that is built from its roots with a long-term business plan, not necessarily sort of a feature that becomes a product or things of that nature. And I think that will ultimately create businesses that are more found in long-term value than they are in short-term success. And I think that's really what sort of a lot of business has been around. How do you find the quick flip? How do you find the thing that you can quickly sort of make into something that you can sell, rather than really trying to create something that is in of itself building for a new ecosystem, building into the future we really want to see. And so I think that's part of where our ability to sort of look for companies that are taking on bold missions, but also doing it in a way where they're there for a longer term horizon and vision. And sort of the mix of that, I think, is what we're going to see a lot more companies being encouraged to do, rather than seen as, how do I create something that can be flipped in a year or two? I think that long-term mindset matched with sort of, really people who are solving large scale problems are going to mean more and more entrepreneurs focused on the things we really need to see taken as problem sets and made into solution sets right now.
Thanks, Kane. Leah, are you able to connect?
Yeah, happy to take this. So I mean, with every 2020 has been unexpected and challenging, I think, for most of us. And with every challenge comes also an opportunity, and how do you make the most of what hand you've been dealt, and what does this entail? For us, it has only increased the mission, because the numbers are starting to look worse for what we're trying to solve. And that has always been, a key driver. We represent what we are trying to solve, and that keeps moving us forward. There is, hugely encouraging wins in terms of awareness in the market of the things need to change, and we look forward to having many more players with us in this mission. There is plenty of change to be made and plenty of opportunities to be had, and you keep working on it. As they say, responsibility is not given; it's taken.
Thank you, Leah. And Jacques-Philippe, how can people get involved with the Ozone X and learn more about what you're doing and support what you guys are about?
Sure. Thank you, Joshua. And, again, thank you for having us. It's always a pleasure to spend time with you and your audience. We definitely appreciate it. People can check us out at ozonex.vc. And I'd encourage for folks who are curious and want to learn more about us and about venture in general to go to our expert page, and feel free to join that to become part of our community. And kind of to piggyback on some of what Leah and Kane were saying as well, 2020 obviously has been a very challenging year, but often they say it's in fire that the iron is forged. And I think we'll come out of this much stronger on the one hand, but hopefully more empathetic towards one another. And, having gone through this shared global challenge and really honing in on what's truly important and understanding the connectivity between us all, we think that's going to start to lend itself significantly more into the venture space, and our model really is well adapted to that. And so we're looking forward to partnering with as many folks from your community as possible and beyond. And so I definitely encourage folks to reach out to us at ozonex.vc, and we look forward to collaborating.
So I know this is a topic that's outside of the experience of many people in our network. Yet many of us work with organizations and with senior leaders and with senior leadership teams. And I think one of the things that I have seen, unfortunately, is that very often the decisions that are getting made at a board or senior executive level about what a company is going to be doing end up being very short-term, driven by the short-term thinking of their investors. And so part of the reason that I think this topic and what we've been discussing is so important for our work in, as emotional intelligence practitioners is that we think about building companies where people can really be and do their best. We're probably going to be better off working in companies that are funded in the kind of ways that the Ozone X team is talking about, because this kind of short-term focus that's driving terrible decision-making in businesses, terrible for people, terrible for the planet, and actually terrible for customers, and not that great for investors. That kind of decision-making is not sustaining the values that we have about putting people at the center. So I'm hopeful that this offers us a different way to engage, and I hope that our experts will be out there partnering with you to help build those companies and creating cultures where people can truly thrive. Thank you all for being here today, and I look forward to learning more about this adventure.
Wonderful. Thank you very much, Joshua.
Thank you so much
to the entire community.
Thank you again all.
Bye, everybody.